First of all, I would mention the electronification of trading processes, as well as the digitization of workflows, which had been accelerated by the pandemic in 2020 and are definitely continuing. Another topic which is coming back is the evolving profile in both the buy side, with the growth of hedge funds, and the lower proportion of central banks with the shift from quantitative easing to quantitative tightening, as well as the sell side beyond large traditional banks to include algo desk, to include non-traditional market makers, as well as regional banks, expanding the pool of liquidity providers. And I would also point out the client's desire to have cross-product functionalities, to be able to trade across markets, across currencies, contingently or non-contingently. When trading platforms such as Tradeweb started electronic trading in rates, for example, we did our first European government bond trade nearly 25 years ago now in October 2000, there was only a handful of banks connected to us and a few clients interacting with them. We now have 45 plus liquidity providers in Eurogovies and about 500 clients trading with them. In fact, if I compare 2020 and 2025 to date, the Eurogovie volume and the number of tickets executed have doubled, and we still see this year a strong double-digit growth in terms of volume in both EGBs and gilts. And I see this growth, which is across client types and issuers, as being fueled by the growing electronification, the increased primary issuance, the higher rates after a long period of negative yields, and of course the innovation in e-trading offerings. In terms of latest innovations leading to increased workflow efficiencies, I would mention portfolio trading in the rate space after the success in the credit world, cross-product trading functionalities such as bond basis or a package of a bond and a future contract, or again our multi-asset package including bonds, swaps and inflation instruments, as well as the growing need for robust reference data such as the Tradeweb FTSE closing prices and the ability to trade at the close against these. And I would finish by highlighting one of our most defining innovation with our automated client solution called AIX, which we started back in Europe in 2012 in the sovereign bond space. In 2020, it represented 40% of the Eurogovie trades. It is now up to 75% of the trades in 2025, showing the very broad adoption of automation in order to manage the ever larger number of tickets which we see across most of our products. First and foremost, we are led by the market. We partner with buy and sell side participants to adapt to their needs. The idea is to have different functionalities in our toolkit, which can then be used depending on volatility and liquidity conditions. So for the future, I would probably highlight firstly the increased demand for pre- and post-trade data in order to make more informed decisions as well as to feed trading automation tools. Secondly, the growth of digital assets, and specifically for us, tokenized government bonds. It's likely that we will see another evolution in this space and a change in market structure. And lastly, I would keep an eye on the future regulation and legislation, such as the change to T+1 settlement, which is currently slated to apply in October 2027.